Ulta Beauty reported fiscal year 2023 first quarter results that disappointed stock market investors. In this video, I'm going to review Ulta's financial results and answer if the stock is a buy on this dip here. So let's get started. Revenue increased by 12.3% to 2.6 billion. Diluted earnings per share increased to $6.88. This was up from $6.30 in the same quarter last year. The total number of transactions increased by 11%, with the average transaction price decreasing by 1.5%. This is to be expected as economic reopening created an increase in demand for Ulta's products. This is likely to persist for the rest of this year and beyond as people are returning to work, returning to school, and spending less time on Zoom. The gross profit margin was flat at 40%. Interestingly, interest income increased to 7.3 million. That was compared to an interest expense of 400,000 in the same quarter last year. Remember, interest rates have gone up significantly since the same time last year, so Ulta can use its cash balance and invest it in government bonds that yield nearly 5% depending on the time duration of these bonds. So the cash on the balance sheet brings in more income. Cash flow from operations decreased to 305 million. This was down from 426 million the same time last year. This was mostly due to a rise in inventories, and it's not as bad as it looks in the change in cash flow from operations. It's nearly a 25% decrease, but the decrease was just because it's building up inventories because demand for its products are increasing. So instead of looking at that cash flow decrease as a bad sign, it's actually good news because the company's building up inventories because it's adding new locations. It needs to stock those locations with inventory, and customer demand is increasing, so it needs more inventories. And when you spend cash on inventory, your cash flow goes down, and then when you sell that inventory, eventually that builds up your cash flow again. Ulta is planning to open 25 new stores in 2023. The company started the year with 1,355 locations. So a conservative plan for growth here for Ulta in 2023. That could persist for several years. It's got some runway for growth there in terms of opening new locations. There's a lot of brick and mortar stores that are closing, and that's going to open up opportunities for Ulta to open up new locations at lower lease and rent prices. Ulta raised its 2023 outlook slightly to revenue of 11.05 billion. This was up from the previous forecast of revenue of 11 billion for the year, but it lowered its operating profit margin forecast to 14.65%, down from 14.85%. So a slight increase in revenue outlook and a slight decrease in profit margin outlook for the rest of the year. Now, to answer the question if investors should buy Ulta stock on the dip, the stock is not expensive and the company has excellent prospects going forward. So Ulta stock, I would recommend the stock as a buy at these prices. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.